I will speak today about market entry strategies and things we've been witnessing when advising foreign investors entering Brazil. This is the agenda I would like to cover today. I will speak just a little bit about macroeconomic fundamentals. We have been hearing a lot of the speeches talking about macroeconomics, so I won't be talking too much on that, just showing two slides on macroeconomics for Brazil and some forecasts. We'll talk a little bit about favorable demographic dynamics, which I think is a very interesting topic, just to understand what is driving the growth of Brazil and how a population will change in the next 20, 30 years. And then I'll show some a result of survey we did with investors in one of our events we did in KPMG. We did an event for approximately 500 investors from all different parts of the globe. It was sponsored by KPMG in Brazil and also what we call high growth markets practice around the globe. We got high growth markets practice in Europe, high growth markets practice in the US and also in Asia. We got those the various high growth market practice just to invite the investors to a presentation. It was about 500, and then we posed some questions to them about entering Brazil, and we got some interesting results that I would like to share with you. And then I'll speak just a bit about private equity investors and opportunities in Brazil. Some of the sectors which might be interesting, and some of the regions and things that might be important for a private equity investor. And then I'll do some closing remarks and open for questions if there's time left. In terms of macroeconomic fundamentals, basically, as you can see, the GDP have been growing consistently over the last couple of years, and the forecast, which most of the analysts are forecasting a growth of approximately, I'd say, 5% CAGR for the next couple of years. One thing is interesting, and I know people have been talked a lot about this in the last year, was the fact that Brazil was the first country the last country to enter the global financial crisis, and the first country to exit the crisis, which was kind of a proving element that the Brazilian economy was robust and the future is promising. And then linked to that, as you can see, the foreign direct investment have been much in line with what's the growth perspective, which makes a lot of sense. As Amaury said, I'm a partner. I'm a lead partner for the market entry practice in Brazil. I am a strategy partner and a strategy within the M&A group of KPMG in Brazil. There was a time last couple of months which I was speaking to investors on every day, and there was 1 week, a period of 1 or 2 weeks, which I was issuing about 2 proposals for investors entering Brazil per day, which was like one proposal each 4 hours, which was amazing. It was a very interesting thermometer to corroborate the appetite of foreign investors in relation to Brazil. On this slide, you can see we show a bit of the consumption, private consumption, linked with unemployment, also inflation. And what we've seen, that consumption is increasing, unemployment is decreasing, inflation more or less controlled, and in link to that, there are other elements which I didn't put here, and I know we'll be hearing during the seminars about availability of credit, the credit expansion, and interest rates. So that's about macroeconomic fundamentals, which we understand are interesting for investors. And that's one of the topics I would like to speak today about the favorable demographic conditions, which is there's one thing people have been discussing, researchers and academics and now the investor community, is what is called the demographic bonus. And I will show what that means. The population distribution in Brazil have been changing in the last 30 years, I guess, more or less, since the 70s. I remember when I was a kid, it was a kind of a perfect pyramid like this. And I remember going to school and people comparing the parameter of the Brazilian demographic distribution with the more rounded distribution in countries like the US and Europe. And as the years are passing, now today, as you can see in the first chart, it's getting a bit rounded. And by 2030, that will be much more like this, and on 2050, much more concentrated on the top. What's interesting for investors is that really the period that we're now starting, which is for the last 10, 20, 30 years, what is happening is you have much more people active working and than the rest of the population. That will be interesting because we have a lot of people generating growth, generating income, and working and boosting the economy, and also funding social security, and also putting investments into the infants and the people which are more young, and which what academics have said is that this is a phenomenon that occurred in other countries in the past, and that's this period of 10, 20, 30 years. It's really exciting times for the economy. That's what I would like to talk about, demographic bonus, and I think it's very interesting perspective for the next period. And that's now I'm going to show a bit of the sentiment of investors, what we've been capturing while talking to investors, and particularly this is the results of the survey we conducted with 500 investors around the globe. The first questions we posed was, what was the company investment profile in Brazil? And what we learned is that most of them were very interested in expanding the customer base, which was in line with the demographics in Brazil and also the increasing purchase power of the population. Another chunk of the group was interested in getting access to natural resources, which was also interesting. We have helped Chinese groups in entering Brazil, acquiring mines and things related to natural resources, but it's one specific agenda of China. But most of the other investors are thinking about expanding the customer base in Brazil. And this group was characterized by what we noticed also is that the major part of the group was already investing in Brazil, or they were considering investing in the next 12 months, which was also interesting. There are the people which are hesitant to invest or unsure whether to invest now or in the long term. They were the small group compared to the others. In terms of sectors, what we learned was that the opportunity seems to be diverse. Within this group of 500 investors, there was no specific sector to focus. That was kind of interesting too. We haven't seen somebody say, well, the big group is oil and gas, a big group in real estate. Or there are some, as you can see in the first graph, there are some groups which are more representative than others. But the overall learning is that there's no one specific sector driving the growth or one specific sector attracting investors. And the other very interesting thing we learned in the survey was that most of the companies or these investors were actually very interested in injecting cash in Brazil, or what we would call or direct investing in companies in Brazil. And the second other part was they were interested in trading. By direct investment means that they are going to acquire a company in Brazil, do an M&A, an acquisition, or maybe start from scratch with the greenfield. It's about 6% of the group. The other piece it was called trade. We put a trade there. It was people interested in trading goods to Brazil. So either getting access to Brazil or base to export, or maybe basically importing their goods that they fabricate or manufacture in China or other parts of the globe, just getting them sold to the approximately 200 million population in Brazil. So it was interesting that most of them are actually interested in active investment, not the financial markets or the capital markets, which are buying stocks or investing in treasury bills or things like that. And that's also interesting to know that about 80% or perhaps more than that said that the main obstacle to invest in Brazil, the complex taxation and bureaucracy. That was astonishing. We knew that there was always a very big concern for investors coming to Brazil. And our tax practice, combined with us, we formed what's called the Global Business Group with a multidisciplinary team. And we invited the international tax guys to join in the M&A group because tax is always a very big concern. And KPMG in Brazil also had a legal firm who worked with us, helping on the bureaucracy issue. So it was a very interesting insight. So these are the insights from the survey that 6% are seeking expansion or entering Brazil in the next 12 months. Well, so short-term investment, invest in the short term. Only 29% are kind of unsure. Well, should I enter now? Should I wait to see what's going to happen? For 6%, the driver for investment is expanding customer base, which is linked to the demographic bonus and the growth in the purchase power. Direct investments and trading, and investment in capital markets more important, less important, and the fact that bureaucracy and tax is a very huge component in the equation. Investment opportunities. I'll just brief on things that we have learned by working with our clients, what we heard from them, and some of the drivers, the rationale, and what is more or less the opportunities we're seeing. One of the drivers for the economy is the abundant natural resources and the room for expansion. It's not just, there is abundant natural resources, but there's no room for expansion. That's not the case. Either in agriculture or oil and gas or mining. In oil and gas, there's various discoveries in the last couple of years, in the last couple of months, and people are always expecting more to come. The cost of extraction is obviously a question mark, but the pre-salt. But there are recent discoveries also in the surface of the sea. And in terms of agriculture, Brazil is vast, and there is various areas unexplored yet, or not fully explored. So there's room for expansion in either agriculture and natural resources. So with this, we believe that there's significant opportunity for people interested in investing in commodities, either for producing commodities or trading commodities, or investing in companies which are already doing that. And linked to this, particularly on the agriculture and perhaps a bit on the mining sector too, there is what we see is that there is a lot of small, or let's say not small, but family-owned business, sometimes big family-owned business, which represent a good opportunity for investors entering Brazil, just acquiring those family-owned business to consolidate and have a large-scale gain. That's very linked to this on the agricultural sector and mining too. One thing which also plays an important, significant role in the growth and one important driver, we believe, is the availability of credit, which is expanding tremendously. And the increase in domestic consumption, as we discussed, and most of these speakers here said in the morning. So what we believe is, the growing, there is a growing consumer class, increasing purchase power, and the personal disposable income. That will lead to an increase in demand for consumer markets, retail, luxury items, and also durable goods, healthcare, and real estate. Because these new middle class, they're hungry to buy stuff. They're hungry to have a very nice house or a good house. They're hungry to have a good healthcare plan. Although in Brazil, healthcare is universal. Everybody has the right to have healthcare, and I can walk in a hospital and get checked by the doctor with no cost. People want more. They want the right to have a more sophisticated type of healthcare, and they are willing to pay for that. In terms of real estate, we witnessed a lot of IPOs in the real estate market in the last couple of years, and we believe there's still a housing deficit in the country. There's opportunities for people investing in low income housing market, not low income, but housing market for the poor, for this emerging middle class. But there are also a market for real estate for commercial and also more sophisticated houses and condos. And next, the fact that there's a decreasing informality. What I mean by informality? Informality in the past in Brazil, the level of corporate governance was very low, particularly on family-owned business. So there's a lot of efforts to avoid taxes, to have employees out of the payroll, revenues out of the books, all that sort of jazz. But either the Brazilian government and also the market requirements are getting tough, and for people who want to be in informality, it's getting harder and harder. The Brazilian tax authorities have invested significantly on ICT, on IT. And today there's a requirement for all the companies to issue invoices, what they call it, electronic invoice. So every invoice is tracked by our income tax authorities. And the personal income tax is done by computer since 1999, I guess, or maybe around that. So it's very robust ICT systems. And there's also enforcement. We've been seeing the federal police, going to corporations and some big groups. There was a very popular luxury group in Brazil based in São Paulo. They were kind of seeing the first one top seller of luxury goods. And apparently there are some concerns with regard to their level of informality and practice, which are not very orthodox. And then the federal police went there and just had an operation, shut down the business. The business was up for sale or to restructuring is currently. So we got the ICT, but also enforcement. So people start to get more concerned about should I continue my business this way, or should I get more professionalized, and etc. And that creates obviously room for private equity investors to come and let's get things sorted and let's bring corporate governance. And by doing this active ownership of a business, you can obviously create a lot of value. Don't forget, obviously, to understand the risks of the company and market you're entering by proper due diligence or other mechanisms for assessing the contingencies. And the last element I would like to highlight is the fact that the Brazil need investments in infrastructure. We conducted a study. We just finalized a study for a big Brazilian construction group, which was interested to understand where infrastructure in Brazil goes and what government will do, and it's kind of a predicted type of work. We are forecasting trends in infrastructure, and it's now in the news, and we see in the newspapers. That is a consistent indication that the Brazilian government will call the private sector to contribute on infrastructure projects. And that, we believe, will be, create opportunities for, just for investors entering concessions, with groups forming a consortium to explore some of the concessions, roads and other things, but also PPPs and infrastructure funds funds set up to invest in infrastructure projects, and infrastructure groups. We've been seeing companies now traditionally dealing with with construction, just constructing. Now they think, well, we should not only build things as a general contractor, but it's important for us to have a concession business or infrastructure business. So that's what we've also been witnessing in the market, and that's what we believe there will be an important room for investors to come and be a player in the infrastructure industry. Some closing remarks. By the hundreds of investors we have helped in the past in entering Brazil, we believe that, and also by conducting studies and research, we have this belief that the market entry is maybe one of the most controllable way to bring growth. And entering a new market obviously requires understanding the market you're entering and etc. But it involves or either acquisition or creating a business from scratch. We also have this belief that Brazilian fundamentals and the demographic will create a good environment for investors with appetite for Brazil. We also, by speaking to other KPMGs around the globe and conducting also studies and research, we we have this belief that Brazil is maybe more, business friendly than others BRIC countries or other emerging markets. And we believe there's room for investments in the infrastructure, as I just said, and also in sectors linked to the increasing consumption and real estate and etc. As I said before. And here's more like to. It's good. Brazil has good fundamentals. There's maybe a bright future for the country and for investors entering Brazil. But you need to. It's good, but you need to think that entering Brazil requires preparation, requires research, requires planning. We also witnesses companies just going to acquisitions in Brazil and acquiring without the proper work or due diligence, whatever, or just understanding the market, and it's always not very good. So understand the particularities of all the specific market you're entering is very important, or the industry, or even understand where are the risks of the target you're acquiring. It's very important. Don't underestimate the risks in entering Brazil. Its favor is good, but there are risks, and the risks need to be well assessed, and better than not just well assessed, but quantified. You need to understand what are the size of the risks you're entering. That's the last thing I would like to share with you with this brilliant audience, and this is just all of these insights we captured from our clients and investors. Our team were able to put this chart, which just summarizes the market entry process, which is before understanding the market you're entering, understanding the things that doing the market assessment, choosing the right option, and then you decide whether you go via acquisition, joint venture, or partnership, and or a greenfield starting from scratch. Well, thank you for your attention, and if you have any questions, I will be. I don't know if there's time for questions, but anyway, I'll be at the KPMG spot in the room, and we also prepared a brochure, a market entry brochure, for this audience, which is a KPMG. There you can also go, and you have more information about how to enter Brazil and strategies for entry, and etc. Thank you.